Now, let's continue our conversation right now. Lots to talk about when you look at markets. Dollar yen, 108, roughly speaking. We're joined on the phone right now by David Kudla. He's CEO, co-chief investment strategist, Mainstay Capital Management. David, very good morning to you from Hong Kong.
Good morning.
Yeah, so I got to ask you about North Korea first. I sort of understand, and there are leaks in the argument already, why the market sees the Japanese yen as a safe haven asset. But now that Japan's literally in the range of North Korea, it's actually in the mix, does that then now exclude the yen as a safe haven trade? It's a fairly simplistic, almost existential question, if you will.
Yeah, I think that we're seeing that the traditional flight to safety, to the traditional safety haven. So Japanese yen, gold on each ripple, each event that causes an increase in geopolitical tension that has lasted a day or two at a time, and we'll continue to see that. We'll see those historical safe haven trades. And, the reason for that, I believe that the yen still sees strength on that is, what is the belief that that Japan is actually at risk? And in all this, what countries are at risk?
So there's obviously some risk to global markets there from North Korea. There's also the risk of some of the liquidity being removed by central banks. And now with these falling bond yields, I suppose you have to at least think about the possibility of slower global growth. You've got earnings coming up in about 3 weeks or so, and that may actually recharge the battery. Is that the way you see it, or are you concerned about earnings?
No, we think that earnings, if we're talking about U.S. earnings and even, earnings around the globe, both that we've seen, improving in Europe and other regions of the world, but specifically in the U.S., earnings has been the redeeming factor for the U.S. market. We continue to trade at quite high valuations. We're quite long in the tooth in the U.S. bull market, but earnings are strong, and we expect to continue to stay strong through this year. And so we think that is a positive for U.S. stocks at this point, with valuations as high as they are.
And I would imagine the dollar being this weak and falling so abruptly as it has, that would maybe, and tell me if I'm wrong here, add to another leg, perhaps a potential leg in the equity rally.
Yeah, it's interesting. The weakness in the dollar, we don't think is as much about weakness in the U.S. as it is strength elsewhere. Strength in Japan, strength in Europe. Those economies doing better. We're later in our economic cycle here. We're seeing the strength in those economies, and dollar weakness also because the Fed hasn't been as aggressive in raising rates. So yeah, we think that continues to be a positive for U.S. stocks as well.
Interesting, because we had an earlier guest say the same thing, that dollar weakness is not such a concern because it just reflects strength elsewhere. When I asked him, well, where is that strength elsewhere that you like the most, he said China. What does David Kudla say?
Well, so if we look on a relative basis, or we look at the history of the dollar over the past year, we saw a lot of strength in the dollar around the time of the election, and at that time, what was also perceived to be more aggressive rate hikes in the U.S., fiscal policy implementation in the U.S., and we've seen that those factors fall by the wayside. So we've seen weakness in the dollar.
And David, what do you make of Mario Draghi's press conference? He's almost basically told us in a very straightforward manner that October is the meeting to watch.
Yeah, the press conference that we had here most recently is considered really dovish, and I think was perceived that way by the euro and by European bonds, because it was nothing new. There was nothing really announced. I think the markets perceived that as dovish, and we're really looking to that next meeting now to get more insight into when that taper will happen with the ECB.
Yeah, I didn't really get much from you in the answer to my last question about other areas outside the U.S. that look pretty good. I want to ask you another question about China, whether or not, the lift that we've seen in exports, whether that might, augur well for just generally growth in the region. We've seen South Korean exports pretty solid, too, although we are expecting the numbers today to be a little bit weaker than last time. How does China look to you?
Yeah, I didn't mean to evade the question.
Okay.
We look at really the U.S. is fully valued, and so what we're looking in our portfolios, we're looking around the world for where those other opportunities are. We see the strength in Europe, and that those markets continue very well, and we see the strength in Asia. We think that continues, specifically China. The concern is the Korean Peninsula and what that could mean in terms of any type of military intervention. The other factor, as far as China's concerned, that could be problematic relative to the issues on the Korean Peninsula are the UN draft sanctions that are being circulated now that China's opposed to because of potential destabilizing factor, and where do we go from there with potential trade sanctions?
David, we got to leave it there. Thanks for coming on the program. Appreciate your insights as always. I'll see you on Twitter, by the way, in a few minutes. That was David Pudla, CEO, Chief Investment Strategy, Mainstay Capital Management. More next. This is Bloomberg.